let's check this out here. So you guys all hear me okay? Yes,
Sound is
no?
perfect.
Okay, good.
Sounds
All
good.
right, hold on. Let's see. Where did the chat box go? Oh, there it is. All right, now I can see everybody. I'm like, hey, Anka, I'm just lurking over here in the corner. All right, you guys. So we're gonna get going here. Yeah, Anka and we met pretty recently, like where we actually got to spend a little bit of time together, huh?
It was great. We met in Chicago.
Yeah, yep.
We had such a great time. We have to do it again very, very soon. And
Definitely.
yeah, so girl power in trading.
Nice. Well, I caught a lot of Boris's presentation here today. It was really good. I love it when I actually get to hear other traders teaching because you can just relate to them on such a good level. He's mentioned so many things that you guys will hear from me over and over again. You know, a lot of us, I've been trading since the mid-1990s. And a lot of us that we've been around that long, we don't use a lot of indicators in our trading. And that's something you're going to notice in my class today. I'm not going to show you guys much for indicators. In fact, I don't even know that I have any indicators on my charts right now. So we're going to look at pure price action. Now, I know in the marketing stuff, it talked about, it said, I'm going to talk about stocks. Surprise, I trade basically every market under the sun. I don't have a preferred market I'm like stuck on. So sometimes I'm trading stocks, sometimes I'm trading futures, sometimes I'm trading forex. I don't know, that maybe I just get a little bored at times and I kind of flip back and forth. Lately, mostly I've been focusing on futures. So the indices as well as gold and oil. So a lot of the stuff that you're going to see here in today's class will be examples of that, especially the most recent trades. And everything I show is going to be a trade that I'm taking. Boris mentioned that your edge in trading comes from the nuances. It's learning all of the little details that go into strategies. So I'm going to share with you one of my favorite strategies. I have about 3 or 4 core strategies, and everything is kind of like variations or different versions of that. The nuance changes in there. You read my books. Oh, thank you. So we are going to learn a lot of those nuances in today's class, because what I do with strategies is I take them apart. I use what I call the building blocks of technical analysis. So I coined this term because when I first learned to trade, there wasn't a lot out there for technical trading, not a lot of education available. A lot of people viewed it as kind of hocus pocus. Now it's kind of a standard. A lot of people coming into trading learn that first. But there wasn't much out there. And so I would learn things like bull flag, bear flag. But there were so many things that go into that I would see something that looks exactly the same as the last trade, and yet one of them worked and one of them didn't. So me, I like to find answers. So I wanted to know, why does one work and the other one didn't? And it comes down to those nuanced details. So without any further ado, let's dive into the strategy. So it is one I call a phoenix, and it actually encompasses a number of more of the traditional types of trades that you guys have heard of in the past. I'll show you what I mean here in just a second. But this is the template that I use. So you're going to notice that there's a lot of things that are marked here. Let me grab my spotlight here. So there's these things that I have marked. These are the components. These are the building blocks that go into the strategy. So a phoenix is basically an initial reversal strategy or continuation strategy. So you'll start off with a downtrend or a sideways trend, a range. And then what you look for is a shift in momentum. And when I first started teaching technical analysis, nobody paid any attention to momentum. Nobody really talked about it at all. I got a lot of, whoa, that's just like suddenly somebody said the sky is blue, and you just notice that it's blue for the first time. And it's something that is so simple to pay attention to, but is so often overlooked. So when I'm looking at momentum, I'm looking at like those levels in the market where we have V and inverse V back and forth action. And then very simply put, I'm looking at how does current market action compare to those normal V's back and forth. So what we want to look for a Phoenix is just a strong average upside move and then a much slower than average correction. And so this is coming out of a downtrend or a sideways trading range. This correction ideally will have two pullbacks. That's your template for your textbook version. Again, there's a lot of nuanced details that go into strategies, but once you learn the basics, you'll start to learn those nuances pretty quickly. There's a couple of entry techniques for using this strategy. The first very basic one is just the pure channel break. This is the one that I don't like to use most because it means that my stop level is pretty large because my stop is going to be under that second low. So these are circumstances where you can get like a 2-to-1 return on your risk, as Boris was talking about. But I like to dive down even closer. And I can get into some of these strategies where I will end up having 10 times return compared to my risk because of the entry techniques that I use, the advanced nuances. So for example, if in this second movement here, you also see two waves on the downside, you can use this channel break as your entry, but you can use that second wave as your entry as well. And if this is coming into a moving average or your 76.4% fan, Fibonacci fan, if you add a Fibonacci fan over here, that can help pinpoint the time development even farther. Also, if it's part of like an inverse head and shoulders, you can look at the distance between your left shoulder to the head and then your head to your right shoulder where your Phoenix is. If those distances are the same, that's another nuance that's going to give you a much stronger strategy. So working all of those together, I've had many trades where I've gotten into these within just a couple of ticks of that bottom low. Sometimes even the absolute low. Gave a class 2 weeks ago where we were talking about second chance entries, where we're actually using pivot points. It's an advanced class, but that's where you can get to. And I'm going to show you guys a number of those types of trades here, especially towards the end of our session today. So you can see just how close to those absolute pivots you can get just by learning the nuances. So the core strategy is really simple. You're looking for a strong upside move, you're looking for a slower correction, and then you're taking the breakout of that correction. The nuanced entries are going to give you the higher return compared to what you're risking. Typical target is just 100% impulse move here to here, but in most circumstances, I'm looking for much more. The only time I'm really looking for that one-to-one level is if this is a V bottom. So if this is a downtrend, it comes down to a V, pivots, goes up, that could maybe just give me more of a one-to-one. But if it's more rounded, like a cup with a handle or an inverse head and shoulders, my odds of getting much, much more is a lot higher. So let's move on to our next chart, and this shows you some of the variations where a Phoenix can take place. So it can be part of this inverse head and shoulders, where it's the shoulder of the inverse head and shoulders. It can be part of a cup with handle, where it can be the handle. In this case, it could even lead to a bigger Phoenix and a bigger handle over here. We have more of that rounded low. And it can be that V bottom as well. So these are different places. And you'll notice that there's kind of 3 or 4 strategies going on here, but I refer to this last segment all the same as a Phoenix. And everything that I'm looking for within that is going to be the same as well. So it kind of lumps together a number of different strategies. into one. So here are the things that we look for. These are the building blocks that we look for. I want, first of all, trend development. I'm going to focus on trend development where we have either a downside move or a trading range. So that is going to give you a stronger upside continuation. You can even see this phoenix happening within let me grab a pen here, within the context of a larger uptrend where it has the move up. Here's your downtrend move, pops up, forms the phoenix, and then continues on the upside. So it ends up being part of a bull flag, or this could be part of a bigger phoenix as well. So this is where it can be in part of a trading range. The other version is, clear this, erase all drawing. The other version is when this is in a bigger downtrend, like that, and then you're getting the reversal off of the lows. So here is a perfect example. I like to use really recent examples when I can. We actually, interestingly, we didn't have a lot of phoenixes in the overall market this past week that I caught or that I saw. I've used more of, there's another strategy, I call it 2B or 2T, and those were all over the place this week. Phoenix is a little bit more rare this week, but in general, they're very, very, very common strategy. And you're going to find them in every market, every time frame. If you trade Forex, you're going to find them. If you trade stocks, you're going to find them. If you're a position trader, you'll find them. If you are a scalper, you're going to find a lot of them. So I've been trading a lot of futures lately, and here's one that triggered right smack going into the close on Friday. So I'm like, where are my phoenixes this week? And lo and behold, there was one right into the close. I didn't take this last one. You can see we were going into after hour sessions. But I did take the smaller one that was in here. So a lot of times you'll get a smaller one, goes into a bigger one. But I want to show you this one just because it is a really good example, and it is absolutely the most recent example that the market has given us. And then I'm going to show you some other ones here too. So you'll notice that in trend development, we've got this nice downtrend move here. We have this flush, pushes everything out. We got a low, and then we get the higher low. You actually had the baby version in here too, which you can see that one if you're looking at like a 20-tick chart. You'll see a little phoenix here on the 20-tick chart. I'll actually open my charts in the background too, so I can pull up some of these here to show you later on. So that can give you a smaller version. I'll get this out of the way here in just a second. Let's kind of open it up for you there. But then we have the bigger version. So your start of your phoenix is basically your first higher low. And then you're looking for that nice solid trend. So here is your breakout. Notice the two-wave correction here. You could also, in this situation, use this as an early entry trigger, but there's something that I want you to watch as far as the building blocks of price development go, called time development. And I'm going to talk about that as another one of those building blocks here in a moment. And you'll see where this might not be as ideal of an entry. So the next thing again, trend development. Here's another one on the downside. This one is part of an inverse head and shoulders down here. So you get, once again, your first higher low. And what you will also notice is that if you transect your downtrend channel here, a lot of times that phoenix is going to form in the level where it's just starting to break out of that channel, or it will start to base coming right out of that channel. So you'll see it holding in that upper range of that channel. Even within here, this action down here, this is a pattern. I told you I mentioned one of that I've been trading all week is a 2B or 2T. And this is an example of a 2B. You get a low. Here, let me show you here. Kind of draw this a little bit more clear. So you get a low, and then you get this slightly lower low. That color is not the best color, but right there. And that's actually a really strong reversal pattern. So you'll get that when it's hugging in the upper end of that downtrend, and then the next pattern is usually going to be a phoenix, which is what is happening over here. Show you another version. And these are all trades that I have taken as well. Like, I guess I don't have the other version of the trend development, but I'm going to show you it with momentum. So the next thing we look for, the other building block, is momentum. So we've got trend placement or trend development, and then momentum. And momentum, again, is that shift where we get the stronger upside move and then a slower correction. The more gradual this correction is, the stronger that breakout can be, and the more the greater your odds are that it's going to have really good confirmation, basically. So here again is that momentum shift on the trade that's set up going into Friday's close. Here's another example. And on this example, I want you to notice the two-wave correction here. Within the two-wave correction, notice these drops, the smaller drops. I'm going to draw on them so you can see them here clearly. This one and this one, they're actually average to stronger than average, right? But if you transect this entire channel, connecting your highs, connecting your lows, your overall momentum is like this. It is the more gradual momentum than compared to over here, where you can do the same thing, you know, combine your highs and your lows. So overall, you've got that momentum shift. This rounded off at the lows. This is a pattern I call a momentum reversal, which triggers right here. And so here you have that phoenix again. Now, we'll look at the entries on this here in just a couple of minutes. I'm going to show you some other examples just showing you the momentum. We're just basically going to go through every building block one at a time first. So same thing here. I like these little bitty shifts of momentum right here at the end on that second wave. That helps that added confirmation that it's going to break out strongly, and then you'll get a stronger continuation. Another thing to note is that when you have more of a rounded low over here, your odds are better that even though it will hit that 100% target level most of the time, your odds are better that it will continue with a larger trend if it has more of a rounded low. So that is something to watch for. Another thing to watch for is your time development. This is, again, something people don't pay attention to. When I'm looking at time development, I'm looking at that corrective portion of the phoenix where I get that slower channel happening. And then I'm also looking at and comparing this impulse move on the upside. So this is an impulse move here. And I'm looking back at previous impulse moves that have about that same momentum to them. And then I'm looking at how long they took before they got going again with another impulse move. You will find that it is very common to have that same repetition in terms of time development before your moves will really start gaining momentum again. So this is a key thing, because if you're too early, you might have a higher high and get trapped. Could be because your time development was totally off. That's a big reason that I discovered a lot of my trades early on in my career weren't working out. My time development was a mess. Here's another example. This one was coming off of that head and shoulders at the bottom. Time development can also mean a period of congestion where things are slowing at a high or a low. So you will see I have A marked here, and this is a phoenix over here. Comes off of this double bottom. Here's the phoenix breakout over here. This actually goes to about a 123.6% extension because momentum kind of picks up a little bit. Comes back down, has another little pause here, then a nice two-wave continuation coming out of that on the downside. Congest along the lows with that inverse head and shoulders with about the same amount of time development as this congestion over here. So that tells me this gets to a point here where it's ready for a breakout. And then you'll notice there's a little smaller phoenix in here on the smaller time frame. And that smaller phoenix is really similar to the same amount of time correction and time congestion that some of these other smaller moves had. So you had time development working in your favor on 2 time frames to get this going and get this turned around. You also had trend exhaustion with the larger 2-wave move on the downside. So good trend exhaustion as well. That helps turn things around with that smaller phoenix that is labeled B there. We saw the close-ups of that a little bit earlier on our other slides. So entry triggers. Entry triggers, like I said, the first entry is just the channel break. I call that entry 3 because it's the least ideal. Depending upon how wide your range is here, you could be looking at it hitting a measured move with even 0.75 return compared to what you're risking. Now it's going to hit it a good amount of time, well over 80, 90%, but it might not be worth it to take the trade if you're only looking for that minimum of a return. You'll find that a lot of times on the ES when you're getting down to the smaller time frames on the ES, like a 200 tick chart, things like that. You might only find like a 0.75 to 1 return on your risk. So what I look for is that smaller channel where I can get into a better break. You'll notice that I have entry 1 and 2 here. That's because these are 2 different entries that on the template just happen to correspond. So entry 1 is as the channel from the second wave of the pullback breaks. So that would mean this wave right here. The second entry is as the channel from a smaller channel has a phoenix within it, and that one breaks. So you might get this little phoenix setup at the very end that breaks higher. So you might get a phoenix within a phoenix, and that's really quite common actually. So on our trades here, you can see in this case, they're all kind of work together. You do have a second chance entry. Like I said, I've been teaching a lot of classes on second chance entries here this week. Oops, my arrow's not working too well. Your second chance entries, basically, it pops up and it pulls back and you buy the pullback. Now, one thing on this setup here that you're going to see more when we talk about stops is this is after hours. So trading has gotten pretty thin here, but you're going to find this on a number of individual securities, especially stocks, where they're trading the same way in normal everyday intraday trade, where they're kind of become blocky like this. You don't have as many of the tails like you've got over here. They become more of a blocky type of trade. You have to use more caution with that because these have a greater tendency to have a fake breakout, pull back, and they can even pull back under that channel and then go. So you can get that false initial trigger. So you want to watch out, use a little bit more caution with those type of things. That's why the second entry can be a little bit better, a second chance entry. But you don't always get a second chance entry on trades. This is also why I never move my stops to break even because a lot of times it's going to pop and it's going to come right back into the congestion and then offer the continuation. You will see that over and over again. The only time I will move a stop to break even is if it also happens to be a technical stop and I'm using some of my advanced trade management techniques. It's not because it is break even. There's some other reason for it. So here's one that has all 3 of those entries. So number 1 is the channel break. Number 2 is the smaller phoenix. And see the little baby 2 waves in there. And then number 3 is the full channel break. Now look at this on number 3. If you're looking at this as your main upside move here, and this is your breakout move, well, you get to a 1-to-1 target level up here, but your entry at the 3rd level means that your return compared to what you're risking with a stop under that low there isn't that great, and it's already moving by the time that 3rd move happens. The best time for something to trigger is when the volume is at its lowest within the congestion or within the pullback. So this little baby phoenix in here, usually this is going to have really light volume. And if you look back in time, you will find that this can be the lightest volume that you might have seen all day. when that phoenix is forming. And a lot of people are scared of that because it represents indecision. Means nobody is really extremely willing to commit on the long side, and they're also not willing to commit on the short side. But if you got momentum and trend placement in your favor, when you get into advanced trade entries, I enter in that congestion when that volume is low. So I will even go in and take that second pullback within that baby phoenix as my entry point. That's getting into more advanced. So start with the basics, and as you build confidence and do more and more sim trading using the tighter and tighter entries, you're going to be able to get to a point where you can get in here, right here. Let me clear this. I'm going to show you a number of examples of this here with my actual executions, so you will see. You'll be able to get in at this level, basically buying the two-wave pullback here in anticipation of the larger move. So I'll show you a lot of recent examples of that here. So we go forward. So here, another entry. There's your first entry. There's a second entry with a smaller phoenix. And then the third entry is the channel break. Once again, if you're using a stop way under here, you're looking for the one-to-one, you don't even have one-to-one return on your risk on that one. But if you use the earlier triggers, you have much better entry. So stop placement, usually using under that second low of the pullback. But if the second low is higher than the first low, you can still use under that second low. So here are some stop levels. So if you have that bigger two-wave, you can put your stop under that low. Now, if you have a smaller phoenix within this bigger phoenix, you can actually use a tighter stop and use it under that smaller phoenix. As long as that smaller phoenix is not just that one bar overlap over and over again, that kind of blocky type of move that we were just looking at. Here's an example of using those tighter stops here. And I will not move my stop until, if I'm looking for a larger turnaround, I'm not moving my stop to break even. I am going to wait until it starts the continuation and then move my stops up if I'm looking for a much bigger target level. And I'll often, if I protect part of my trade, I'll use those pullbacks to add back in. I'll show you an example of that here in a bit too. Here's where you don't want to get too aggressive with this stop. Now, it didn't happen in this instant, but many times this can flush right here and take you out of a trade because of this blocky action. So be aware of that. That's one of those advanced nuances Boris was talking about. Pay attention to those specific nuances, and it's going to save you a lot of heartache in the end. You'll find this happens a lot of times after hours, especially like in early after hours trading in the indices, and you'll also find it happens in a lot of like the stocks that might be moving on news, so they get a lot of interest in the morning, but then they start to get a little slower midday because they're not like historically the most active securities. So watch out for that. Target level, again, measured move is typically your ideal first target level. That's going to hit a good over 90% of the time. Many times though, like I said, I'm looking for way more than that, but it can hit that 100%, go into another correction before it keeps going. So your Phoenix is basically the start of a brand new bigger trend. But you have to pay attention to the trend's development. So if, for example, the downtrend over here, whoops, reverse, what did I do? Okay, well, we'll just use this one. Well, say the downtrend over here is really big, then that can keep going and turn around more and head even higher than your measured move. But if that downtrend is, relatively small, it might not be able to get turned around as easily. It might just be something where if this is a larger uptrend over here, you get a downtrend like this, and then you see your Phoenix forming, then this could just be something that goes into an avalanche is the opposite of a phoenix, and it would be the shoulder of a head and shoulders here, and then can turn around like that. That, again, like I said, is more common when this is a V pivot here. And when your trend is more extended on the upside, A phoenix coming after just a first pullback is more likely to be scalpish or a really short-term move. It could be, a week or two on a daily chart, but it's not as likely to do a full trend turnaround. So trend placement, again, very, very important. Also, if it's a V bottom or not. So this, you're going into the end of the weekend, you'll notice it kind of has overall momentum here that is slower than the downside. So that tells me this is really struggling. As long as there's not news or something coming out, I would expect this to even have a greater chance of turning back over with the way this is acting and pulling back down again. But, we need some sort of momentum change here. So right now, momentum is still favoring the upside on the smaller time frames. But let's see here. Let's clear this. Flip this over. Show you guys another measured move target example here. So this is on the euro dollar. Here's the two-wave pullback, and I just used the Fibonacci extension tool on this. You can eyeball it too for the 100%, or you can just draw a line and then grab your line and move it over here. There's lots of ways you can determine where that 100% level is. What is so fascinating about this 100% target level is that when your momentum on this Phoenix breakout is comparable to the momentum of the impulse move going into your pullback, there's going to be many cases this will hold as resistance on the dot. Like I've seen it hold to the tick or within a few ticks. It's amazing. And usually if it stalls at these 76.4 and then pulls into the 100%, you'll even get a pivot back to that 76.4% a vast majority of the time. So when that's on a larger time frame, I'll even short those as pivot trades, like where I close one position and reverse it, if it's on a larger time frame, because you can get that nice move down into that 76.4% again, as long as it paused over here first. If it goes straight up into the 100% extension and you're not seeing much for pauses, you have a much better chance it's going to go for even further than that. If it makes it to the 50% and pauses, that becomes more risky. It could have a harder time hitting that 100%. It's more likely it might stall at 76.4. So you really want this to pull up to 61.8, and then it's most likely to hit that 100%. So that's mostly concerned when you're dealing with a V bottom or something where this is part of a correction in a larger downtrend. That's where you've got to watch for that to happen. So you want that bounce for your Phoenix to get past that 50% of this move to give you that confirmation you're going to get to that 100%. Nuances, guys, right? Little bitty nuances. So it's a great thing that Anka is recording all of this so that you can go back and jot down those notes on this. Otherwise, it's easy to miss them. Let's slip on over here. So here's another example. Pauses almost to the T at that 100% on that. Look at that. Not kidding when I say these hold like to that split exact level. This has a little bit of a blurb where it manages to take it past it, but look at how much it pulled back first before it went back up there. So it held that 100% almost exactly, pulled back almost halfway of that smaller impulse move before it bounced back up. And then this was another one rounding off at the lows. So it was able to keep going and reverse a lot better. Here's actually the bigger time frame on here. And if you use a simple Fibonacci retracement of this downside move here, you'll find that these highs correspond with those Fibonacci retracement levels many, many times. It's just a really cool extra tool that you can use to help identify some of your resistance levels. There'll also be with price resistance too, because you got the low of where your market shifted momentum here, and then you've got the start of where it shifted momentum. So the start of that momentum shift with this high is resistance, and then the low of this momentum shift in here also serves as resistance in here. So it's really interesting how you get those corresponding levels. Also, all this congestion back in here. So support and resistance is one of the core building blocks that I use, and you can see a lot of them coming together here. Avalanche is the reverse of the Phoenix. So if you flip everything over, you're going to find that you will have strategies that are exactly the opposite. And basically everything that I just taught you about the Phoenix can be flipped over and applied to the Avalanche. So most of these trades are trades that I am putting forth in my League of Traders. This is my online trading community. I'm going to tell you guys a little bit about this, and I'm also going to show you other trades. So I promise to show you trades where we are doing a lot of those pivot type of trading. And that pivot type of trading can come into your Phoenixes as well. So you can get into your Phoenixes really, really close to that absolute low. So here, these are just some screenshots of comments that people had posted in our League of Traders forum. So I quit looking at other systems after finding Toni. I figure I shall learn to read markets like her or becoming dependent on systems, which I refuse. So Boris mentioned this too when he was talking about AI. And I get a lot of questions over the years, why don't you just automate your trading? There should be a way that you can automate it, right? But there are a lot of nuances. And so far, I haven't really had the desire to put all of that time into putting into something that I know I'm going to have to basically sort through and, you know, weed things down anyways. I'm perfectly fine using a lot of the basic scanners out there for stocks. Things like even core gap scans. If you look through the gappers, the morning losers, the morning gainers, those give me a really good list of stocks to work with. I give a lot of classes on trading, how to trade gaps as well, and where you're going to get like momentum gaps that are going to have a strong trend day versus ones that are more likely to flop and fill. So I haven't felt the need to try to dive into that. So let's show you some other stuff. These are just like, this is our group goofing around, you guys. And so this is a chat platform. It is open 24/7. So you can see they're in there chatting when I'm totally, you know, not in the room anymore. And look at that. I saw so many gorgeous phoenixes. I had to smile the whole time. So you're going to see these types of trades over and over and over again. Harvey says, in the last few days, I've learned more than in the past year. And we really are a family of traders. I ran a trading room from the late 1990s for, oh my gosh, probably, I ran it full time for a long time. And then I ran it part time, kind of got burnt out because I was there like all day, every day. And I'd had people wanting me to do a trading room again. So what I did was I created the League of Traders. And over the last 2 years, since I started it back up again, it's kind of evolved where we meet every single day, midday. And how we do it now is I have Mentor Monday on Mondays. And during Mentor Monday, I teach a class like today's class, like the Phoenix. And then Tuesday, Wednesday, and Thursday, we open up and use the live market action. And we just look for Phoenixes to trade. We look at where in the market are Phoenixes most likely to happen? What are the nuances? Hey, this looks like a Phoenix, but it has all of these cons that are going to make it more risky, or wow, this one looks like it's going to really keep going. And throughout that week, traders and myself will post Phoenixes throughout the week in the League of Traders chat room, in addition to the other trades that we're taking too. But it really helps you focus on one aspect of trading every week. And then on Friday, we have Forward Focus. And Forward Focus is just a look at the week ahead. So we look at every market under the sun, stocks, futures, Forex, gold, whatever. Every single thing is recorded. They're on GoToWebinar. And so when you sign up, you actually can go into the member section and sign up for all of the classes that week. And as long as you're registered, you're going to get the replay link automatically from GoToWebinar 2 hours after the session ends. And then it is also posted in the member section for 30 days for monthly memberships and lifetime access for annual memberships. So you can access it basically anytime and go back. And it's always good to go back and review it, just like you guys are going to go back and watch today's session of all of our great speakers here today. So I love seeing these comments. These are just things people have sent me over the last couple of weeks, you know. Just people that have spent so much money on other things. I like to use a simple system where I'm not using complex definitions or terminology. It really is based upon the types of things that I shared with you guys today. So right now we're doing a special. It's 3 months of League of Traders for $150. So the link is ToniHansen.com/LOT League of Traders 150. And that offer includes not only the Monday Mentor, the League of Traders Live, also Forward Focus. It includes the 24 hours of the chat room, which you've seen, you know, some of the stuff here. And it includes my alerts channel. So my alerts channel also is just me posting out my market commentary throughout the day. So if there's trades I see, I'll post the trades I see. If there's extra examples of things that are focused from our Monday mentor session, I'm going to be posting all of those charts that I come across too to drill home what I taught you in Mentor Monday. Basically, what I'm treating this is as like semi-private mentoring. So I like to bring in the traders. I like to ask them questions, really get the participation going. And that's what you're going to see in the League of Traders chat room too, is you're going to see our traders posting their own trades, showing you examples of the things that I've taught you and how they're making progress. And it's really a great supportive community as well. So every week kicks off with Monday Mentor, Mentor Monday. Here's the schedule. Basically, we're going to be at noon every single day. We have been meeting at 11 o'clock on Tuesdays through Thursdays, but there was just too much confusion between the different times. So everything is just at noon. We're going to move that to noon going forward. Again, all are recorded, so you can go back and study them all the time. And I get to see when people go back and watch them, and I am thrilled at how many clicks I see when on the replays. It's great. So many of you are just going back and taking notes on those extra things. Because during our League of Traders Live, which is Tuesday through Thursday, we're actually having the trades as they're unfolding. So most every day, I will find something that is unfolding, that is just starting to unfold or getting ready to unfold, that goes along with what we taught in Mentor Monday. So it's a great opportunity to not just learn things like past, like, hey, Toni said this happened and she traded this. Yeah, right. Let's see it live. This is what we do. We do it live. Also, here's your 24-hour trading community in Telegram. So you can get that, join all of our community, help reinforce your learning and build relationships with fellow traders. I've met a lot of these people at the expos. It's really, you know, great working with them. Here's an example just from this week. I told you I've been trading gold a lot, right? Well, one of the strategies I trade is a 2T. 2T often goes into an avalanche, which is the opposite of a phoenix. So this is an example of a post that I posted in my alerts channel. And then I posted S1 as it was hitting. This is our first target level. It means, well, support 2, sorry, S2. And then S3, you can see I posted, this is a screenshot that was posted live. And this showed the second chance entry for, because that week we were also talking about second chance entries. And then here you can see exactly how well it held each of those levels perfectly. This isn't a one-off. This is like every single day. And then you guys can even see my entries. So notice I sorted gold here at 1554, right here. So you're seeing not only the trades, you're learning not only how to get into the second chance entries if you're taking a little bit of time to pull something up. A lot of trades I'll say, I'm watching for a 2T, and it might even be down here, so the 2T hasn't even developed yet. That was another one we had this week too. But you'll also get to see how I'm entering them and how close you really can get to these highs as you become more advanced. So over and over again, I'm showing you my exact entries. So you can see it's not that we are looking for bigger channel breaks. We are getting much more than that 1-to-1, 2-to-1 return compared to what you're risking. And sometimes I get the absolute tick low as my entry. This was a second chance type of entry. So I had the order on the books here. Again, 2 weeks ago, all we were talking about was second chance entries. So I had the order on the book. It got me filled as it hit that level and then took off. So that week, all we talked about were how to do this. It's an advanced strategy, but you guys learn the basic strategies and then you learn the advanced stuff. Another example, this is called a momentum reversal. This often can lead into a phoenix as well. So all of these that I just showed you, these are reversal strategies where a phoenix is really common as a next pattern. In fact, this one here is a little bit of a hybrid. So this could have turned into a phoenix right here. So you'll notice I used that two-wave pullback as the entry. Wasn't a pure phoenix in that the movement over here wasn't shallow, like shallower than the upside move, but it could have been. It was a perfect location where a phoenix could have developed. So when I give a class on Mentor Monday on phoenixes, we look at locations where the phoenixes are most likely to happen and where you're least likely to see something happening. Let's show you some other examples here, and then I'm going to take questions. I know you guys have a lot of questions as well. So another example, this is an avalanche. Doesn't look like one, does it? Remember those nuances and variations? This is one of them. So I'm looking at this as a two-wave pullback here, and then I'm looking at this as the two-wave correction here. So we actually have a megaphone that's starting to form in here, but that second high in the megaphone is like the second high in an avalanche or second low in a phoenix. So it's really the same idea, same concept, just a little bit of a different take on it. And you can even see that in this larger picture, you have a shoulder over here, goes into the head and goes into the right shoulder. So you have that head and shoulders in there as well. It's messy, but it's there. And the more you learn the core patterns, the more you're going to learn these versions, these variations as well. And this, you can see my entries here, 76.33, 76.32, 25. That was right there at that line. And I was also combining it with a second chance entry using this previous high. So I had a measured move. It was a combination of a lot of things. I had the measured move here. Let's see, where's my line? Here to here. I had the previous high. I had the time development here to here. I had the wave count here, 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 and here. And usually you would have volume too. You don't have volume on tick charts, but you would have a volume drop off a lot of times too. And in here, you guys, there's even a little baby phoenix right here. Let me see if I can highlight that for you. See the little baby phoenix right there? There's even that little baby phoenix in there. I just saw him. But this is a version of your upside down phoenix, your avalanche. So if it was more of a standard avalanche, whoops, wrong tool there, it would look like this. It would go down here. I thing is kind of jumpy, and it would go up here. You would have your two waves up like this and here. Ah, my jumpy. And then you would get the short. So it wouldn't have the lower low in the middle. That's just a variation of it. All right, you guys have questions, go ahead, post those in here. What do I think on gold? I've actually been in love with gold. Gold is something that I've been bullish on for quite a long time. That's one of the reasons I've been trading it so much lately. I do think it's at a good level of resistance on the weekly time frames, on the daily time frames. But longer term, my outlook for the year is still pretty good on the upside. Now the spider is a little bit tricky. The overall market over the last couple of years, especially going into like 2017 or so, I'd been looking for a much larger period of correction in the overall market where we would see a lot more congestion, a lot more back and forth. We'd see a lot more things like avalanches, 2Ts, momentum reversals, those other strategies that I threw in here towards the end for you. And we're seeing so many more of those. But right now, we're at a tricky spot. So for setups, I'm focusing on smaller time frames right now. I'm not seeing as much for new position trades or new investments on things that are tied closely to the overall market. Sure, there's a number of individual securities that are kind of like moving in their own field, their own realm. But as far as the overall market as a whole goes, I'm kind of in a holding mode. So I'm trading the smaller movements back and forth, but we get these periods of congestion. Let me show this to you. I've been trading futures a ton here as well lately because I like trading in back and forth markets like this. I like the movement that they offer because you get a lot of things like, hey, here's like, this little head and shoulders in here. Your avalanches over here. You get a lot of that happening in this. Let me show you the daily chart just quick so you guys can see where we are on the daily chart. Actually, you know what? I'm going to show you the weekly too. And in Forward Focus every Friday, we go over this. We look at the markets every Friday in Forward Focus. So what we were looking at going into, especially going into 2018, January 2018, we did that January, like the first day of the year, I always go back in Forward Focus and look at the bigger picture. So we even looked at inflation adjusted charts going back to the inception of the indices in Forward Focus. And what we noticed is that a lot of them are at measured moves on the inflation adjusted charts. We saw the same thing going back into 2000 that led to that bigger correction in 2000 and the NASDAQ especially. And that same type of extension is happening here right now. And that's what's led to the market widening up, the increase in volatility. You can see there were 3 waves of upside as well. This over here is a zone where, coming off of these highs, you're more likely to see that avalanche pattern forming. So avalanches on daily charts are becoming more and more common right now. I'm going to go back to the daily for you. This is essentially a phoenix on the daily chart as well. You can see the 2-way pullback, but it wasn't as ideal because see how fat that channel is and how rapid this move down was? That's why this got off to a little bit of a kind of more hesitant start. Intraday, we had a smaller phoenix and that went to 1, 2, 3. So right now we're exhausted. It's coming into an exhaustion level where this should widen up again. So that's what I'm looking for at this point on this. But this is an example of a phoenix. It's just not as pretty of one. We did have buy strategies that took place here intraday. You can go back in League of Traders live and go watch the classes from back then too. Do I use MACD on my charts? Nope, never. So I am a pure chartist. Sometimes you will see me use Fibonacci. I use Fibonacci fans, retracement levels, and extension levels. That's about it. Notice there's no moving averages, there's no CCI, there's no RSI, there's no MACD, there's no stochastics, there's no Bollinger Bands. I'm using those building blocks of price development, and that's what I teach you guys. I teach you guys to read price, to read momentum, to read trend placement, and not rely on things that might give you contradictory information. I don't have a problem with using indicators sparingly once you are, really secure in using them. Just you need to learn when not to use them. So, moving averages work great until they don't. Everything works great until it doesn't. One tip with any trade setup or strategy is that if you have it working twice in a row, the third time it's probably not going to work. So if something comes into a 20-period moving average, holds it. Comes into the same 20-period moving average again in the same trend, holds it. Third time it comes into that moving average, you're probably not going to get that same type of reaction off the moving average. It'll be more stunted, it'll hug it, it'll break it. So third time is basically the opposite of being the charm when it comes to the markets. Like here, 1, 2, third test, more likely to break it. So you're going to find that as just kind of an interesting thing. That's going to happen with all of your indicators too. Do you have a preference on time frame for intraday trades? I would say yes. So on my intraday trades, let me see if I've got a chart here that shows you all of my tabs. So here's my tabs on the bottom. Let me grab my mouse. So I start with, monthly, and then it goes down to weekly, daily, and goes down and down to smaller and smaller time frames. So you'll see my time frame charts first, and then they'll flip over to tick charts, and then I'll use those. This one I'm missing a lot of my tick charts on, but I like to rely on basically 400 to 500 tick charts to give me a core idea, but I use multiple time frames, and then I drop down to infinitesimally smaller time frames to look for momentum movements as things get into those entry levels. So as I see an entry zone approach for the Phoenix, I'll drop down to the smaller time frames to time the Phoenix. And that's how I can get into those trades like almost right at the high or the low by doing that. All right, gang, I know I got off to a little bit of a late start here as she had to get me up and running, but I don't want to cut into Kiana's time. So she's going to be up here next. So stick around, and I look forward to seeing you guys in League of Traders and getting to know you guys as traders. And hopefully I get to teach you a lot as well. League of Traders has everything from very, very beginner information and knowledge to very, very advanced. So this is why it's always important to go back and review as many of the sessions as you can, because if you are new, you go back and review the sessions a couple months later, you're going to pick up many things you missed the first time around. I gave you guys a lot of tiny details on the Phoenix here today. You might have missed first time around, you'll pick them up the second time around. And then go and look for them live, look for them in the actual markets. You can do that in our forum with all of our other traders hanging out in there. You can ask me, hey, Toni, does this look like a Phoenix to you? And I'll say, hey, you know what, Dave, what do you think the pros and cons are on that Phoenix? And I draw you guys into the conversation so that it reinforces that knowledge in your own mind and gives you confidence. It's basically all about building confidence in your trading. So thank you for joining me. Thank you, Anka, for having me. And you guys enjoy the rest of today's workshops.
Thank you so much.